Welcome to the Knakal News Network. The Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hello, I'm Paul Bubney, Managing Editor of GlobeStreet.com, and welcome to the Knakal News Network. We're here today with Bob Knakal, Chairman of Massey Knakal, and we're going to be talking today about the overall citywide sales market in 2013. Bob, would you say that 2013 was a good year?
Well, Paul, it depends how you look at the numbers, and numbers are all relative. So if you compare what happened in 2013 to 2012, you would say it was a decent year, not too great. Actually, if you look at what happened in 2013, the numbers were down compared to 2012. In terms of number of buildings sold citywide, we had 3,767 buildings sold. That was about 8% lower than the over 4,000 in 2012. The dollar volume dropped from $41.2 billion in 12 down to $37.6 billion. That's about a 9% drop. So if you just looked at the comparison of those 2 years, it looks like, hey, the year wasn't so spectacular. But if you think back to 2011, that was a year in which everybody in the marketplace felt fantastic. Volume seemed to be doing great. A number of transactions were going on. And if you compare what happened in 2013 to 2011, we see that the dollar volume increased by 35% over that period of time, and the number of buildings sold rose by a whopping 69%. So we felt that last year was really terrific, and we're very encouraged by the activity that we had.
We've sort of seen this movie before, looking back into the late 80s. How does this compare to what happened that time?
I think we are eerily similar to the conditions that we saw in the mid to late 80s. And what I'm referring to, obviously, is the tax law change, Tax Reform Act of 1986. And 86 was a big spike because of the capital gains tax changes. So we saw activity in 1987 actually drop a little bit, but then in 1988, activity exploded and was much higher than we saw in 1986. 12 was off the charts, and 13 is a little lower, but we believe that 2014 is poised to be the same type of year that we had in 1988, which is going to eclipse the numbers that we saw in 2012.
What is going to be behind this increase in numbers compared to anything we've seen before?
We have so much demand, and what is happening is that the values have increased so greatly such that today every single property type in every neighborhood is selling for much higher prices per square foot than they were at the peak of the last cycle in 2007. And these increased prices are going to be very alluring to property owners. And so we believe that the increased values are going to precipitate a lot of folks putting their property on the market. And with all that supply coming to the market, we think it will be absorbed by the tremendous demand that exists. So we're expecting in 2014 to have the highest number of properties sold that we've ever seen, which was 5,018 properties sold back in 2007. But we also believe that the dollar volume will exceed the $62 billion that we had in 2007, and we expect 64 billion, maybe even more this year. In summary, 2013 was a fantastic year for the investment sales market in New York City. If we compare 2013's activity to 2011, we see that the dollar volume is up 35% and the number of properties sold is up 69%. We believe that demand will continue to exceed supply, leading to additional increases in value as we move throughout the year.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.